Thank you for joining us on Black Investments Matter. I'm Antoine Anderson, and today we're talking about leasing versus buying an auto. This is probably the biggest purchase you're going to make next to your house. And in this market where everything is super inflated in price, what you should be looking out for and why you should be making that decision. Virtually all businesses in America right now are going towards a subscription-based payment model. Ownership isn't really a thing in the US anymore. You're paying a subscription for your shelter, that's rent. You're paying a subscription for the automobile you drive, that's a lease. Ownership is the thing that seems to be under attack. Whether or not you choose to own or lease your next automobile is probably the biggest decision that you're going to make outside of financing a home. As things in the US get more and more expensive, even with a prime credit rating of above 720, you're looking currently at an interest rate on your home at around 10%. Same thing with your auto loans. But the question is, when it comes to owning or leasing a auto, with the average price of the automobiles in this country now upwards of $40,000, and that's for a small used car, a new car. Used cars are right behind it at around $30,000, kind of dripping down into the $22,000 range finally. But we're looking at a major expenditure coming out of your monthly budget. And is that something that you would want to take on? Well, here are some different tools that you can look at to try to figure that out for yourself. First up, we got bankrates.com's lease to loan calculator. This thing is great because it allows you to plug in real-time numbers for the purchase that you're trying to make on your vehicle. Since you're already going to know the price range that you're willing to pay versus what the dealership is going to ask you for, you can plug those numbers in yourself versus waiting to go down to a dealership and having a car dealer tell you what those numbers are going to be. Now, you'll know what your budget is beforehand, but a word on the now changing layout, or what I call the Tesla effect of auto purchasing in the United States right now. A few years ago, when Tesla first got started selling automobiles, in many states, there were laws actually prohibiting their direct to manufacturer sales model. That came with a bunch of new laws being created. Atlanta was particularly hit hard. There was some litigation going on where Tesla physically had to have a storefront with cars on a lot to sell vehicles in this state. Since Tesla has overcome that hurdle, now manufacturers like Toyota are starting to adopt the direct to manufacturer business model. This is going to cut off a lot of the fees that you are paying as a dealership owner, but it's also going to put you in a different tax bracket, really, because really no more dealerships. These are now be extensions of the manufacturer. Case in point, you can go online and purchase your vehicles now, just like Tesla was doing, without having to actually physically show up at a dealership. You are going to go down there and basically pick out the color and pick up your vehicle. Most manufacturers now will be delivering your vehicles to you, much like the Carvana business approach. So these changes, these subtle changes, are affecting how much margin there is in the automobile selling industry. Now that those margins have become razor thin, manufacturers' suggested retail prices have gone through the roof, and those fees have been being absorbed by the potential customer. As we go into this new phase of vehicles rapidly being outpriced or overpriced for the average American to even purchase, the manufacturers are looking for ways to cut those costs. And what better way to do it than with this direct to manufacturer business relationship that you and the customer and the manufacturer will engage in. Now, as for why or how you would go about buying your next vehicle, whether or not you purchase or lease, the difference can be in the thousands and thousands of dollars. Each has their own different drawbacks, similar to how it is a drawback to own a home versus rent a home. Well, with renting, obviously, you've got the threat of eviction if you fall behind, and that's a lot faster than the threat of foreclosure if you are falling behind on the home that you are purchasing. A lot more laws that can protect you. And in the case with an automobile versus leasing versus an auto purchase over terms, dealerships are now starting to offer, and car lenders are starting to offer longer terms. We're talking, oh wow, 7, 8 year terms. There's no way a vehicle is going to maintain any value after 8 years. It's just not going to happen. $40,000 on a vehicle over 8 years, you're still looking at payments in the $500, $600, $700 range, and the vehicle is going to be worth less and less. For that reason, leasing just doesn't really make sense because you're actually paying a higher premium during the more depreciable years of that lease. Even if you were to able to finagle a lease over 48 months, you're talking about paying the amount of a vehicle for convenience, and the convenience being that you can turn the car back in to the dealership and get a new one every year if you want. But there are stipulations. You got wear and tear fees. If you damage that car, you got to pay for that car. If you go over the mileage, thousands of dollars in fees for that. There is just really no upside to it. Add to that the cost of, if you choose not to do either, and you get into the gig economy of Uber, Lyft to get around to where you're going to be going. There is really some tough decisions you have to make if you're getting into this car market. I would typically lean towards purchasing versus leasing. Even if you qualify for a lease, you have to think, is it worth the thousands of dollars you're going to be paying extra for the same vehicle that you may keep? I don't know. I just never understood the business model for leasing myself, but hey, it may work for some, but just not for me. Let me know what your thoughts are on that subject. I'm more inclined to stick with the particular model, but as far as purchasing anything right now, we're going to have to wait a few more months because it is clear to me and to a lot of prognosticators that this is an unsustainable price point for consumers. We can't afford not only the increases in the car prices, but think about how much you're paying in insurance now. Think about how much the repairs on this vehicle is going to cost. Think about the rising cost of fuel, or if you are trying to go for an EV, think about what it's going to mean to outfit your home or pay a charging fee, whatever those may be. Around the country, they are varying, but it's a lot. It's a lot. And we're talking about $1,000 out of your monthly income to go towards transportation. Think carefully before you get into that. Leave your comments below. Thank you for watching, and I will talk to you very, very soon.